Dukes, I'm
Yeah.
keen to hear, I know that you take a pretty structured approach around business financial management. Can you just unpack the key things that you found to be important on that front?
It can be a big topic, but what I love to do is to simplify things, and as you said earlier, that the phrase is boring is profitable, and profitable is fun. So as long as you can stay the journey on that, it's great when you see the money cracking in there and you go, oh my god, there's $10,000 in the bank account, and there's like $30,000, and then you crack your first 100,000. I was like, woohoo! And then you crack 7 figures in there, and I was like, all right, this is good. So it's achievable as long as you can stay the course and keep going. So some of the things, particularly from a financial perspective, let's say from a business perspective, but it really still applies whether you're an entrepreneurial employee or you want to start up your own business. The principle is still the same. And I said that a little bit earlier. It's just treat the activity that you do for your profession as a separate entity. And there's inputs in there, be your time, your energy, or in a business, there's marketing, there's sales, there's team in there, there's delivery, and then whatever's left over, is what you get to take home. And what I'd say for most people, as you know this as well, we took you through this, is rather than just saying this is what it gives me, that's what I've got to live off, is reverse that and go, this is what it needs for me to live my ideal lifestyle. What does this vehicle need to give me? Now, the first question then is, what's my ideal lifestyle number? There's some methods that we go through on that, but to keep it really, really simple, if you just add up all your expenses for last year, what did you spend money on? And then just add on holiday, maybe a new car every 5 years or so, buying any other toys or gadgets. You add those extra things on top of that, and then work out how much that's going to be. And we've done this with thousands and thousands and thousands of people well over a decade. And for most people, the range to live an amazing lifestyle is between $180,000 and $380,000. Let's take it up a bit and say between $200,000 and $400,000. It's way closer than most people think. That is to deliver an extraordinary lifestyle. So if we just go, I've got my ideal lifestyle, this vehicle needs to give me that as a income that comes to me personally. If you're an employee, then you want to be going to the owners or the leaders in that organization and to ask the question, what can I do to add more value to the entity, this company, such that I could, if I increase the business by another $100,000, can I get $20,000 that come to me, or that type of discussion? So that's the thinking from an entrepreneurial employee perspective. If you're an owner of business, it's in some degrees it's easy, you've got more control, and that you just go in there and go, cool, what's the profit that I need to have out of the business? You work that out at the beginning. Okay, this year it needs to feed me 300,000. Okay, therefore, what do we need to do to get that? We need, 600,000 or 700,000 revenue. What do we need to do in leads to get that? And how many of those we need to convert to give us there? If you just reverse engineer it from where you are going back, it gives you a clear pathway. So that's like ideal lifestyle. Based on that number, what does the business need to give you that over the next 1, 2, or 3 years? Then what I do is go, let's then go, what are we going to do with that money? Now, what I see, this is the biggest trap. So this is like business allocation or cash allocation, I call it. Then you think about, what do you do with the money? What's the assets that you're going to build out here? And when I see people, they put it all into one bucket. And they go, oh my God, money's piling up. And they go, I can spend this money and buy this new thing. And they don't break it down into different categories. And I'm sure, Ben, you've got lots of different things around the methods around that. But essentially just saying, you got a war chest if shit hits the ground, and you've got to lean on there. For both business and personal, as a starting point, you want to have at least 3 months worth of expenses covered. That's 3 months of all expenses within the business covered, and 3 months of personal covered. That builds up your buffer, and then you want to be just thinking about, well, for me, like I'm saving up for a new car, and so I go, right, I need a new car, this is how much it's worth, and then I just every week I allocate more money into that bucket. So I've got about 7 buckets, and next property, okay, I'll just put in the deposit so that all the money goes in and it goes straight into the different buckets based on the money that we pull in. And it just keeps it really simple. It's in a way of doing a budget. Effectively, I don't like the word budget necessarily. It has like a negative connotation. But we go, okay,
spending plan.
Spending plan. That's exactly right. A spending plan is what I like. What are we going to spend money on? including ourselves, our health, our mindset, our investments. I want to buy a new house. Okay, great. Or a new commercial property. I need this amount of money. Then we just make sure that every week the money goes off and siphoned into those buckets. So, and that's what we call that. Then with that money going into there, then you can allocate where you spend that, which is what we call asset allocation. So looking in the business is cash allocation. What are the percentages that you should be pulling out, for tax, for war chest, for you to take as drawings, and then do the same thing from a personal perspective. And once you set that up, you do all the critical thinking at the beginning. And I'd say the beginning of the financial year or the end of the calendar year is a good time to review and go, what do we want? And then go, all right, cool, here's the money coming in, and it automatically goes out. That's a key part of it. And then you can just let it go every quarter. When you've got your BAS time, get in there and have a look, see where it's going. Are we on track? Are we off track? What do we need to change it? It's pretty simple when you look at it. So simple, but not easy.
Yes.
Because
I think you need a starting point as well, because everyone's business is different. And I think it's easy for people, whether it's their personal finances or business finances as well, that they can say, oh, no, I'm a special snowflake. And, therefore I can't follow the process that everybody else uses. And potentially that is true. And there might be some nuances or elements that you need to have do something new or innovate on. But the reality is that it's probably all been done before, and you just need a starting point. Once you got the starting point, then you can course correct, you can tweak things, you can say, well, this thing, or actually, no, there's a gap there, or this isn't working, or this isn't working as well. But if you don't start, then you never get started. And then it just doesn't happen. But I think it's a good lesson there to keep it's a separate allocation for your business, the expenses that you've got there, then what happens personally, and do that. And I'm a big fan of making sure you got that war chest in both as well, so that you're never forced to make difficult decisions, whether it's, your personal emergency fund and you're selling investments at the wrong time, or your business thing, and then you're having to change your business decisions and strategy at the wrong time, and not being able to follow things through to get the outcomes that you want. I know that you're a big fan of that in your business personally, as well as with the people that you support. And I think that can give people not only great outcomes, but good confidence that that you've got the ability to, you're not going to have things that throw you off track, that you're going to have to lose sleep at night.